John, give us some good news. Give us some bright spots.
Hey, how are you, Kelly? Hope everybody is safe, healthy, and happy right now during the crisis. Yeah, I think that some of the bright spots to look forward to, obviously, is that a lot of the death rates are obviously going down. The curve is being bent rather mightily right now throughout the globe, actually. So the numbers are incrementally better, as well as we've had a lot of trials on the drug trial front are going on. There's some vaccine testing going on in the UK, so that's positive. And the big positive, I think, on the horizon is the Fed meeting next weekend that a few people are talking about. And I think that the forward guidance from the Fed is going to be very, very aggressive, more aggressive than the market is anticipating right now.
You know, John, when Bill Miller was on last time, he said it was a kind of once-in-a-generation buying opportunity for stocks, and that was about 4 days before the recent bottom. Most people are skeptical and concerned that this rally can last because it's been so sharp over the last month or so. Do you guys think that was the lows of this cycle? And what do you think the rally looks like, and who's the leadership, or who do you think investors should bet on?
Well, we can't say the low is in, but we think that right now a good trading range is probably going to be between 2,400 and 2,900. We're going to have, obviously, the Fed next week. Warmer weather is coming. That's going to really help things a lot. I think that you're probably going to have a decent, we had 30% rally off the lows. That was a 37% retracement from the highs. So back in the Spanish flu, the drawdown was about 47%. So we were really only 10% from that level. So we really corrected quite a bit. The positive thing is that we corrected from such a high level. The economy went into this at such a high level. The Fed and also the government has reacted much more quickly than they had in 2008. So that's actually another positive going forward. So I think that right now the market is digesting the big rally off the bottom, which, as you say, has been met with a lot of skepticism, as rallies have been in the past. So there's really nothing new there. In terms of the earnings, I think that really the earnings in 2020 are going to be kind of just put aside. You know, everybody's pulling their guidance. There's not a lot to go on. So really, we're going to be continuing to trade off of drug discoveries, obviously incremental news in terms of the curve being flattened. And again, there is so much stimulus out there that money supply is growing 20% year over year, which is fantastic. China's coming back online. That's going to be another positive. And there's good things to look forward to. We're seeing a lot of value, obviously, across the spectrum. Some of the things that we're looking at is there's a lot of opportunities in credit right now. I think there's a lot of bonds that kind of got thrown out here that offer equity-like returns. So we're looking at some of those. And we're rotating into some big stocks, which you'll hear about very soon.
All right. Well, I look forward to that. But overall, a little bit more optimistic view of what's going on with the economy, like you said, the Fed and the markets. John, thanks. It's good to check in with you as well. John Spallanzani with Miller Value Partners.